Do you want to learn how to trade like a pro without relying on any indicator on the chart? In this video, I'll be teaching you all what you need to know about full price action. I'll be guiding you step by steps on how you can trade effectively with candlesticks, market trends, support and resistance, trend lines, market structure, fib level, and how to enter trade and manage trade effectively. You will also be learning what risk management and the psychology involved in trading. This is a full guide from beginners to a pro trader. So in this video, stay tuned, pick your biro, pick your book, because you are ready to learn how to trade consistently with full price action strategy. So if it's your first time seeing me, my name is Akiole Victor, aka VStreak, and what I do on this channel is to make traders that are unprofitable, that are struggling with finding their edge, struggling with managing their emotions, helping them to trade effectively in the forex market and to have a steady rising equity curve. So let's get started. So if you've not yet smashed the like or subscribe button, kindly subscribe now so you can get timely updates on anytime I drop psychology tips, and anytime I drop teaching videos, you can get them first and watch and learn. So let's get started. Make sure you're with your book and with your biro to learn effectively. So let's get started. So we'll be starting with the foundation of price action. So what is price action itself? Price action trading is a strategy that relies purely on the movement of price on the chart. It just relies purely on the movement of the chart. You can see the candlestick yourself. You can be able to know what the candlestick is saying. You can see the support where the price is rejecting from. You can be able to see the resistance. You can be able to read the trend without having any indicator to tell you that yes, this is a bullish trend or this is a bearish trend. Why does this pure price action works more than an indicator? So price action works because it reflects real-time support and resistance dynamics. One thing you need to know about indicator is that it's based on mathematical calculations. It's just been more of like mathematical calculations. When you're talking about those stochastic, they have the way the moving average, they have what they add together in order to give you what is actually going on. If it is a bullish momentum, you see some we have volume candle. I think some of them work by the kind of the numbers of bearish candle we have and the pips they cover. So but with this price action, you can actually see the resistance and the support in real time. So institutional leave footprints in the form of key levels, liquidity zones, and price reaction. So we understand these movements, and it helps traders to anticipate market direction without relying on lagging indicators. I've once used an indicator to trade before, and sincerely it was very, very bad. I won't actually mention the name of the person that I got the trading course from, but it was a very funny indicator. It's actually be profitable for him, but it's not my style of trading and I trusted. It's not very, very. We like shortcuts in this world, and we want everything to be short. So indicators is actually very, very easy. It's very, very easy to use in the sense that you don't need to analyze anything. You don't just need to go to the manual of whosoever created the indicator and say, okay, how do I use this indicator? If it goes green, if it shows buy, if it shows sell, should I buy? But there are times whereby the real data happening in the market, the indicator won't be able to fish it quickly, and it will put you in a very, very big loss. So how does the indicator differ from what pure price action? So indicator is indicator-based trading, which relies on mathematical formulas and past price data. Price action focus on real-time market movement. Indicators often lag, while price action provide immediate insight into market sentiment, allowing traders to react very, very quick. So it's just all about that. In pure price action will take the day over and over again. So let's start with our first price action strategy, which is candlestick pattern. So we'll learn how to We're going to the charts now, and we'll learn and see the charts and see the candlesticks and see how they help us to actually take trades effectively and what the candlestick is all about. I'm sure you all know that the chart is all about candlestick. So candlestick is the main framework of the chart. So let's get into the chart. And having a full understanding of a candlestick pattern, the psychology of how the patterns are being formed is halfway to success in trading, because you can easily tell what the market is doing by seeing what's on the chart. You can easily tell what the market is doing by seeing what's on the chart. And you need to understand what is candlestick pattern. You can see the chart comprise anybody's chart you are seeing in trading is all about candlestick. Hardly do people make use of this line chart, or we have other ways of displaying the asset movement. But candlestick is the main thing in which every trader uses in displaying the information of the chart. And we have different type of candlestick patterns here, and we have their functions. Like this particular long red candle, which is a bearish candle, is called a bearish engulfing candle, and you can see it's covered the whole candle. You can see it's start bringing momentum into the chart. You can see the strong bullish candles, but before that, I don't want us to actually rush. So I want us to have clear understanding of what is a candlestick pattern, of what candlestick pattern is. So a candlestick pattern is a way of displaying information about an asset price movement. It's just a way in which we display the asset price. We trade a lot of assets on the chart, so these candlesticks help us to display the price movement. So candlestick charts are one of the most popular components of technical analysis. Like I said, most traders in which you see their chart is all about what candlestick. So and the candlestick consists of a body and a wick and a color. If you observe on this chart, we have two different type of color. Though this is a personalized one, most people make use of green and red. And green is for increase bullish, and red is for bearish, for sales. So and they have wicks. If you observe, you can see it's just more of our normal traditional candle at home. You get, so you can see this wick now is just more of like your normal candle at home, that's the normal traditional candle. That's just how it is. And we have the body. This body, even though values are also in the wick, that's why I marked it out, so you can't take it away that yes, when I bought this candle, the value of the candle started from here. So there's this wick and there's the body. This body is the whole entire place in which we have the candle filled in. So this is the body of the candle and this is the wick. So and we have different colors, so you need to understand that. You can see some as wick. More of time, the wick mostly just display rejection. So the wick is more of like the shadow that indicates more of like rejections at that level, that maybe price is trying to reject. Maybe it's try as if they are trying to push up the price or use up the price. You know how your normal candle is. When you start using the candle, it starts creating wick, and will keep it start reducing in value. And if you are filling the candle also, and if you are just producing the candle, you are filling the wick with the body also. So it's just more like that. And we have different color which indicate the direction of the market. So a green or white body indicates price increase. My green, I turned it to blue. Is it, I think, blue? Yeah. So while the red indicates what price decrease, it shows what a price decrease. So candlestick pattern, in order to fully need to understand candlestick pattern, we need to first understand time frames. If you understand time frame, you're able to understand that yes, this is how candlestick works. If you look at this at my top, I don't know if my video is displaying that. I think yes, I think it's displaying that we have 1, 5, 15, 30, 1 hour. So we have different time frame on the chart. We have the 1 minute, we have the 5 minutes, we have the 15 minutes, we have the 30, we have the 1 hour, 4 hours time frame. You get, so every of this time frame, if I switch on to this 5 minutes time frame, it has a different information in which it is displayed. If I switch to the 30 minutes, you have different candle. Why is it like that? So time frame is just more of like the time it takes for a candlestick to open and to close. So if you're on the 1 minute, it takes the time it takes for that 1 minute candle to open and to close. And candlestick, again, not forgetting, candlestick is the full activities of buyers and sellers on the chart. So it depends on, and time frame is differs. We are going to actually still talk about multi-time frame analysis. We have different way in which you can actually use the candlesticks with different time frame. I don't know if you are with me. So if you are doing a day trading, you may just be using the 1 minute, 5 minutes, 15 minutes, and the 30 minutes. If you are doing the swing trading, I'm using the weekly, the daily, the 4 hours, and maybe the 1 hour or 30 minutes time frame for your trading. So you need to understand how every of this works. So we have different types of candlesticks that I would like us to go into. I just mentioned one which is one of my favorite, is the what they call it, the bearish engulfing. But let me take it from more of a simple way, which is the first one is an hammer and an hanging man. So hammer or an hanging man. Let me look for it on the chart. Yes, this you can see this long wick here. It is called an hammer. You can see it looks like an hammer. Let me point it out for you so you can see. Can you see this? Long wick and small body. This is a typical example of an hammer. Wow, I love it. Let me look for that one before. Okay, you can see this is an hammer. Let me look at this on that hammer. Can you see this guy here? You can pause the video and look at it. Make sure your video is on high quality when watching this so you can see. Look, I can see these two hammer. This is actually combination of it is a twinser because they both formed together. So that's it. So let's okay. I think that should you can let me make sure I have this when I'm explaining the hammer and how it's being used. So an hammer is just a candlestick pattern that shows a bullish momentum is actually coming. It's more of a bullish reversal candlestick pattern. Let's say you are looking for a certain level or a certain price level where you are feeling like this price is going to pump up. So the hammer, when you get to see the hammer pumping up there, showing up there, you know that yes, the price is ready to push. So the hammer is a bullish reversal pattern that forms during a downtrend, and it is named because the market is hammering out a bottom. The market is getting to a bottom where it's about to start rejecting to go to the upside. So we have we have an hanging man. One thing I want you to know in the market is that anytime we have, sorry, my chart went off. Okay, sorry. So one thing I want you to know is that anytime we have anytime we have anything bullish, we also have the bearish aspect of it. So like I said, it's a bullish reversal candlestick pattern. So we are going to look at the bearish, which is an hanging man. So an hanging man is the typical example of an hanging man is this. Sorry. Typical example of an hanging man is this. We have a long wick and a small body, a very long wick and a small body. So anytime, yes, this on that very perfect one. This is a perfect one here. Wow, this is nice. Almost move like this. So anytime we have this hanging man there, you should note that yes, the price is ready to start selling massively. So it shows to us that yes, the price is going to start getting rejection. It depends. We know that trading is all about probability. So and most times when you see it, there are 60 to 50% probability that yes, the price is going to sell. So we have the long wick and the small body. So it's just more of like the what do they call it? The price is trying to hammer the top. So some people still call it hammer, some call it pin bar. So that when we get to see that, we know that yes, sellers are ready to take power. So now let's go into the next candlestick pattern, which is doji candlestick pattern. Is a candlestick pattern that appears small. It's also being called what they call that candlestick. It's also being called indecision. Yeah, it's also being called indecision. This now is a doji. Let me point it out. Sorry. This is also a doji. This is a doji here. There was one I really saw here. This is also a doji. So this candlestick pattern shows that there's buyers and sellers are not agreeing. The doji is more of like a single candlestick pattern. It is the only candlestick pattern that is neither bearish nor bullish. That's one thing I want to know. This is because the doji represents a neutral state, which the price closes exactly where it was open. Let's say the price is at $100 and the price is closing after the time frame understanding. It's closing after 1 hour. Then obviously there's no price decrease or increase. So that is how a doji works. So my favorite, let me get into my favorite candlestick pattern, which is the bullish engulfing candlestick pattern. Don't forget I said anytime we have anything bullish, we'll have a bearish aspect of it. So we'll have bullish candlestick pattern, bullish engulfing candlestick pattern. Let me show you how it looks like. Yeah, this is an example of it. Yeah, this is a perfect example of a bullish candlestick pattern on the chart. So it's comprises of two candlesticks to be formed correctly, where we have a red and a green covering the red. You get? So we have the red, we have this green candle covering it. So when we have this candlestick, it shows that what buyers are ready to take over. Look at under bullish engulfing here. It shows that buyers are ready to take over. You can see this under bullish engulfing here. Let me point it out clearly for you. So this is another bullish engulfing candlestick pattern. So now let's get into the next candlestick pattern. Like I said, anytime we have a bullish aspect, we are going to have a bearish aspect of that candle. So we are going to go into what we call bearish engulfing candlestick pattern. When we hear the word bearish engulfing, from the word engulfing, something covering, so it's just what. So the engulfing is more of like the something covering something, the previous thing, and bearish is red, is sales decrease. So now this is a perfect example of it. We have this green, then this red covering the previous candle, which is great. You can see how it is very, very strong, very, very strong, and you can see momentum all the way to the downside. Let me look for another one. Yeah, look at this guy here. You can see how this red candle covered the whole body of this candle. So if you are possibly using this candle to take a trade, you can easily just pick it and mark a 1:3 on the trade. So it's just a very, very easy. Wow, if you guys know a popular chart pattern called head and shoulder, left head, this is a retest of the neckline. It's this beautiful candlestick pattern. This is a very wonderful trade to take a 1:3. Very nice, very nice. Market is fun, guys. So this is a bearish engulfing candlestick. So let's go into the other candlestick which I love so much. Again, the two candlesticks which I personally use in taking trades are morning star, evening star, bullish engulfing and bearish engulfing. And sometimes when I have the hammer and the angle man, it's just to tell me that yes, whether the bullish sides are ready to take power, I should start getting ready, there's rejection there, or the buyers are ready to take over and start preparing. So but when I see my morning star, my evening star, they are more of like signals. One thing I want you to know again is that they are more of like signals. Candlesticks only gives us signals to take a trade. That's one thing I want you to know for sure. So the next candle is what? The morning star candlestick pattern. This particular candlestick pattern is a pattern we see in order for us to take our buy trades. It consists of three candles, which is the red, green, and the first one is going to be a long red. The second one will be more like an indecision candle, and the third candle will be a strong bullish candle. So let me show it to you on the chart here. Okay, let me see the perfect example of it here. I'm seeing the evening star. I've seen evening star like 3 now, 2. Let's do evening star and morning star together. So evening star consists of 3 candlesticks. We have the green, a red, very red angle man or an indecision with a red candle. The 3 candles comprises to form what an evening star. This is how it looks like. You can see there's a perfect example of it if you are using it. This is on that one. You can see I'm looking for morning star. That's when I saw the evening star. Okay, yeah. This is a very nice morning star. You can see we have red, a small indecision or an hammer candle with a strong bullish candle. You can see we have that price, even though it was unable to sustain that much. Looking for a very clean morning star candlestick pattern. Yeah, look at this very nice one here. Red, more like a small indecision and hammer with a strong bullish candle. So that's how the morning star and evening star looks like. So these are more of the basic candlestick signals which I use, and they are very, very important. They don't fail. They give accurate answers. And most times, one thing I want you to know is that trading is all about probability. So it puts the odds of success in my favor, and I'm happy about that. That does not mean that it gives me 100% guarantee on any trade. There is no 100% win rate to any strategy. So this is one thing you need to understand about candlestick pattern. So the next thing I'll be explaining to you is support and resistance. Support and resistance. So how does the support, how does the resistance, how do they look like? Yeah, when you're talking about support is a level from a very standard word. What is for 1 year something support is a level whereby price is finding, or let me give you a general English term or English understanding of what support means. Support is holding anything from either going down or falling or not just letting it go, just something holding something. So but in trading, how we use it is support is all about a level whereby price is finding it hard to go down and is ready to start going to the upside. So we having that knowledge, we can be able to buy from our area of support. So if you come to the chart and you find out an area where price is finding it out to go down, and most times I like the third touch to confirm my support area. After I have the first touch here, second touch here, and the third time I have that touch, I don't joke with it. Sharp, I'm taking that trade. Sorry. So in the third time, I'm placing my trade after seeing my entry candlestick signal. You can see where my entry candlestick signal is coming to play in. Let me show you a sharp example on it. You can see this level here. That was where I just find how I do it. You have 1, 2, 3. Let me use my arrow to pick it out. 2, 3. And a third candle, you can see at third touch we had a strong bullish engulfing candle. Wow, very, very nice. I'm seeing on that one. Very strong bullish engulfing candle. Let's say we'll aim for a solid 1:3. Wow, very beautiful. Very beautiful. You can see, very nice trade. Let's see another level where we have it. Again, we have 1, 2, 3, and at third time we had a very strong bullish candle. Let's say you put your stops at the low and you take your trade. You can see, very, very nice, very nice trade. Very, very nice trade. I won't lie to you. And you catch. I used to tell people, make sure you are making more than your risk. You are making 3 times your risk. Make sure you're making 3 times your risk. It's very, very essential. Very, very essential. So now this is all about support. So how can we understand resistance also? So there's this other notation I do use when I take support or teach my student on support. I like them to see support as a ground level, like your ground level where you are staying at your house, and at that level there's something really holding you, there's a force holding you from not going down. So that's the ground is more like your support. So you keep bouncing up, you keep working on it, you get. So that's how I see support. So now resistance is just like your roof of your house. Your roof, you can see your roof is actually holding you from breaking to the upside. So that's how it is. You keep hitting the roof. That's how you can actually play rough play. You always keep hitting your ceiling and going back to the ground, and you keep going to the support. So the resistance is more of like where we sell. And how do we confirm it? We also confirm it from our 3 rejections. So we sell. So let's say price is coming down to a level, coming down, and at that third coming down, All what we are interested to do is what is to sell. Only looking forward to what to sell. Very clean. So anytime whatever the price is doing, we are looking forward to what to place ourselves. That's how we make use of the resistance. So let's look for clean resistance. You can see here 1, 2, 3. The sales was unable to actually last for long. You can see here we have some sales. You can look for a very clean. Okay, look at this. This actually failed. This failed. 1, 2, 3. But there's one understanding I want us to get about trend, especially when you are entering your place. This is a very full uptrend market. It's actually very, very wrong trading without trend. That's why some trades are actually failing. But in the video, we are still going to get to understanding trends and using trend. But I'm just letting you to know, understand what do you call it, what support and resistance means in general. Because when you are selling off in a bullish market, my brother, you are doing yourself trouble. You are bringing trouble to yourself. So you can see we have the third touch here. This is a bullish because you can see that strong momentum candle to the upside. I'm looking for where the market is having a downtrend. I'm not really getting this. Is a clean support also. You can see 1, 2 at the third touch here. You can see that solid form to the upside. This is a very nice price action here. Oh, sorry, this is my red chart bar. Sorry. Okay, good. So that's the understanding about support and resistance. You use them, make sure you use them with trend and get to what is trend. So another very good price action knowledge which I would like to share with you is trend lines and ray lines. I'm sure a lot of you have seen people draw things on their charts like this. We have this, the trend line tool, and normally we have the price coming to bounce off the trend line. Are you with me? We have price always bouncing off the trend line. You've seen something like this. So basically, how do we use the trend line? We use the trend line to identify a level of trend continuation and a level just more of a trend continuation and a level that shows sometimes when a mini trend, I call it a mini trend because my market structure is always key. Understanding my highs and lows gives me the proper understanding of the market trend. So trend line, sometimes I call it the mini trend. Sometimes it can really align with the overall trend of the market, but sometimes it lags. But mainly it's very, very good for trend continuation. If you use trend line for trend continuation, you are going to enjoy yourself. And how to use it? You can use it for bullish trend continuation or bearish trend continuation. So how to use it for the bullish trend continuation? You want to see price bouncing up from that level at least 2 times, and at the third time you are looking forward for a buy. So you want to have it 2, 3, and at the third time here, most times there's always a very strong level of support there that price has been rejecting. You are looking forward to see your candlestick entry signal here to take your buys to the upside. Looking forward to see your buys to the upside. You need to see the candlestick signal sharp before taking the trade and see a level of support there or a level of resistance. Some of us take low quality trades. High quality trades are the best. Always look forward to take high quality trades. So for a bearish continuation, we have price going, and at the third time we are looking forward to place ourselves from the third touch. This is how we get to use it for trend continuation. Good. And you're looking forward to sell. You can see why we discussed our candlestick pattern first, because candlestick patterns helps us to give signals. It shows the signals to us that yes, it's time to sell, it is time to it's time to buy. So now let's get into how we can actually use this same trend line to understand that yes, a particular trend has ended and something else wants to happen on the chart. So when you have the price breaking off from this trend line, you get maybe not obeying the trend line again and it's breaking up. So where you're looking forward to actually buy is what at the retest of the trend line. You want to see the price come back to that trend line that has been holding the price and to give you an entry signal. Sometimes I really love to see two leg rejections. I want to see the price first reject, and the second time I'm looking forward to enter the buys from here. So this is another very good way to use it for an extra confirmation. And if we have the bullish continuation changing to a downtrend, you want to really see that two leg rejections to take your sales. You want to see the price come and reject on that trend line for at least 2 times, and the second time you are looking forward to place your sell trades. So you can see how we get to use the trend line. So this is how we get to use the trend line effectively. This is how we get to use this trend line effectively. So without wasting much time, let's go to the chart and see how we use this trend line, how this trend line works. Let me delete what we have previously. Okay. This is more of like a support that we still had previously. This one, so you can see bouncing of the trend line. Sometimes it cannot be this. I'm just looking for something. The long-term review. Yeah, it's not holding. Okay. Good. I love this. This one is fantastic. You can see 1, 2, 3, and the third touch. You can see this bull bearish engulfing, and you are taking your trade sharp, and targeting more of like a 1:3. You put your stops above the candlestick signal that give you the signal. I'm looking for a bullish continuation, not just we have bearish all the time here. Okay. Wow. Are you seeing this? 1, 2, 3. And at the third touch, we have a very strong bullish candle. I said that for an extra confluence, you always see a level of support there. Oh, there was something I did not include when I was explaining support. Anytime a resistance is broken, it is going to be turned to support. If you have a resistance here and it has been finding it out to go to the upside for a long time, anytime the price now breaks it, it's going to use that level that has been acting as resistance for support to the upside. So you can also trade it this way. And anytime we have a level of support that has been holding for a long time, we can also still use it to take our sales after it's been broken. So a level of support can easily turn towards resistance, and a level of resistance can easily turn to support. So let's move on to market structure. Understanding market structure, I've done a lot of video on market structure, and you can check it, but I'll do well to also explain it here. It's also a very clean way of price action. We have, market moves in 3 phases. We have the uptrend, we have the downtrend, and we have the sideways movement. Okay, sorry, I think my chart is back. So we have the market trends to the upside, and the market can also trend to the downside. The market can trend in both ways, and it can also have a sideways movement of this, and you can actually trade in any of these market movements, and which is ideally it is very, very important to trade in a trended market than in a ranging market. But some people love so much to trade from here, to buy from a level of support and sell from a level of resistance, and the price stays on that range. But I personally, I love to actually trade within the trend. When we have a creation of the lower low and we have a lower high, a new creation of that new low on that lower high, new low, lower high, lower high, new low, lower high, new low, and we have break of structure, break of structure, break of structure, and break of structure. So the price can either move in any of this way to the downside, and anytime it moves, it keeps breaking a level of support and using it as resistance. So you can also have the price pushing up in this way. So having this clear understanding on market structure is very, very important. It helps to get the direction of the market. Now let's try to look at the trend on the 1 minute, on this 30 minutes time frame. You can see this is what we've been using. So we have a creation of higher high, higher low. Then we had a change of character. Change of character is when the previous higher low has been broken and trying to switch to the downside, but it was unable to hold, and the trend returned back to an uptrend. We have an higher high, higher low, break of structure. We have another break of structure, break of structure. We had a change of character before returning back again to the upside there, for a break of structure to the upside. Another break of structure, break of structure. So we have a very clear way in which we identify the market trend, and it's just by understanding the wave. What phase are you in the market? Are you in an uptrend or you're in a downtrend? So trading price action, you need to understand basic things, and it is very, very easy. You can easily see it with your eyes by recognizing break of structure, understanding support and resistance, and understanding pullbacks. It creates pullbacks to the downside, and most times you can even be fortunate to get trend line picking it. You can be able to pick trend lines, and it can even be in a range. So this is how it moves. Then I want to understand multi-time frame analysis also. Multi-time frame analysis is all about you switching from different time frames to take a trade. Switching from different time frames to take a trade. And you can switch from the daily, it depends on what you are actually trading on. Switching from time frame is something that is crucial. You need to get to understand what's happening on some certain time frame, not you just being fixed on one time frame. Like now, I have a day trading system whereby I have a swing and a day trading system. But let me attend to the swing first. The swing, I make use of the daily time frame first, and to get the trend, to get the direction of the market, I use the weekly time frame also to get the direction of the market. You can see this, you can know this with your eyes now. You can see this is a total bullish trend. We use the daily, and I use the 4 hours also to get the trend. So in those 3 time frames, I make sure one time frame is actually in sync. I make sure one time frame is in sync. I don't know if you're with me. I make sure one time frame is in sync. The 30, 15, and the 5. This is the day trading one. So if it's just the swing trading, is more of the daily, the weekly, the daily, and the 4 hours must be in sync. Must have let me use my text tool so we can get this perfectly. Weekly, daily, 4 hours. Two of these time frames must actually be in sync to take any trade. 2 time frames must be in sync, and with the entry time frame is trying to explain multi-time frame analysis for you, and the entry time frame is either the 30 minutes or 1 hour. So let's say we have this fib already. Let's say this is my uptrend market is pushing to the upside, and the trend is like this. So I'm trying to get an area there, and which on 30 minutes I'm waiting for to use the candlestick signal to take my buys, or if it's a downtrend market, if market is pushing down, maybe possible creation of the lower high I'm looking forward to catch my sales from there, and I'll be going down to 30 minutes or 1 hour to find my entry. Either I'm seeing a single candlestick pattern or a two-leg rejection or multiple week rejection. Some people call it exhaustion. Is it exhaustion or what they call it? Where price is finding that to push to the upside. So at that level, I'm looking forward to pick my trade. So moving on to the next point is using the fib level, using my fib level. So this is the fib level tool. You can see is if you are in my Telegram channel, you know that this is a tool I use very well. I use this tool very well. It's one of my ingredients to take a trade because it is easy to actually mark out a zone where the price is going to retest, or the price whereby the price is going to pull back to before pushing to the upside. So we have the 0.62, 0.705, we have 0.79. So any of these three levels are valid levels for me. And when we have an overall retracement to this level, I'm waiting forward to actually see some more of like a two-leg rejection. Like I'm waiting for something like that. So if you like to actually screenshot any of these rules, to screenshot the levels of the fib level, please kindly screenshot now. I make use of 0.62, 0.705, 0.79, and these are the tools I make use of. So you can screenshot it. It's very good. Let me see. Okay, let's look at an impulse here. Let's say this is where the price is, and I'm marking it to the upside here. You can see there's a level here. This is on the 4 hours. Let's go down to the 30 minutes to look at this area if we are going to get the candlestick for entry. I mean, wow, very beautiful. This was where we got that 3-touch example. I don't even know it was that. So let's say from here. So we have the price pushing like this. So this is how the fib level is being used. You can see how I scaled down. You can see very strong level of support there where price was holding before. So the fib level and the structure, you all work hand in hand together. So they all work hand in hand together. So it's just more of like confluence trading. So price action trading is the best. You just basically see things with yourself. You can basically draw it, decide yourself, not a robotic approach of trading. So the other point which I would like to talk about is the execution of the trade. And executing trade is very easy. You combine every of these things we've been teaching together. Firstly, to take a trade, let me give a list for you to take a trade. I think that will cover it. To take a trade, you must identify the trend. You must have a key level. You must have your fib level. You must have your candlestick signal. You must have your candlestick. You must have possibly a trend line. So these are more of, if you are able to study all these variables which I listed out here, the trading is going to be very easy for you. So these are more of all the things you need in order to take a trade. Okay, look at this example of a trade we took here, where we had the structure, we had the trend switching to the upside here. That was on 30 minutes, and we were able to catch a the trend is actually an uptrend. You can see higher low, high, and on the 30, was it on the we're able to see a correction and a pull. We're able to see an impulse and a correction. You know, the way you use your fib level is retracement. We're able to see this impulse, and we're trying to get the retracement, and we're able to find a level of support for it on 30 minutes time frame to take our trade. So you can see everything, combining every of these confluences together will actually give you a very quality trade. Combining the trend, the key level, the fib level, the candlestick pattern. Sorry, I wrote candlestick twice. Sorry. Candlestick pattern. So you have the candlestick pattern. So the last thing which I want to talk about is the psychology of trading. Psychology is something very, very important. You only need to understand some certain five basic truths of trading, and psychology will become very, very easy for you to manage. Psychology is all about the confidence, the discipline, and the patience involved in trading, and that's all about psychology. But the five basic truths is you need to know about trading is that anything can happen. When you are aware that anything can happen, you won't over leverage, you won't over risk. You need to understand that there's always a unique moment on the chart. Every moment is actually unique. Every moment is unique on the chart. You need to have that awareness. That's why you don't have to over leverage. That's why you have to follow your rules. You coming from a losing streak doesn't mean that you keep losing. You just need to keep executing. You coming from a winning streak doesn't mean your next streak will actually be a win. You don't have to over leverage. You have to understand that trading is all a number game. It's just all about the business of numbers. You can lose five and win five and still be in massive profit. You need to still understand the truth that there's a random distribution between wins and losses to every set of variables. So any set of variables here, the trend, the key levels, the fib levels, the candlestick, the trend line, there are probabilities. There's random distribution between how they can win and when they can actually lose. So these are more of the psychological things you need to know. And the risk management, which we all know, is risk management is not something that should be preached anymore, because everybody can actually hear it and they know the right thing. It's all about risk appetite. But I'm sure you need to know that if you have to lose all your accounts and you understand that every moment is unique, how are you going to get on that capital? So why do you have to? A lot of people switch trading into gambling and over-risk their accounts. It's in gambling that you are going to take a bet of stake a bet of, let's say, 1 million naira, and you're losing it all. Why will you do that in trading? And if you have a 1 million funded in your account, you should only be risking like 2%, let's say max 5% of your account per trade. So why do you have to max on to 100% or max on to 50% of your account? That's gambling. You lose two times, that's all on that account. So risk management is all about risk appetite, but the advisable risk advisable risk parameters I give is what, 2% of your account. Don't risk more than 2% of your account. That's the way you can be insane. That's the way you can actually be able to achieve profits over time. So that's all about this video. This is all the key levels, key things you need to understand. If you are looking for a way to get mentored on every of all the things I've explained here, because I only brushed through them, you can actually use the description box. You're going to see my name, you see my info, and how you can get connected to me. So make sure you just go there or drop a comment that you need more guidelines on all this, and I'll message you myself personally, and we're going to hook up on how we can actually get started with your teaching. So have a wonderful